because there are no really day traders in Warsaw.
Exactly, that's what I'm saying.
Is there something about this exchange fees, or maybe? Is there something about exchange fees that we don't have day traders in Warsaw? Ludwig is laughing anyway. Okay, that's a big topic, of course, but it's not for here.
And I have also a second point. It's maybe I think what's also would be welcomed is to have the local investors, both investment funds and pension funds, to be even more activist than they are right now. There is, I mean, the minority investors in the companies, they do have a lot of rights, and it does make sense to really use them as often as possible, which in return should bring higher efficiency of the companies and really put a lot of the managers and owners of those companies on check and make them want to deliver value to all the shareholders. So I think there is still some work to be done here by local investors.
Not only by local investors, but also we had similar speakers this year as last year at the beginning. We had Prime Minister, we had the Treasury Minister, a different one. But in the meantime, what happened to Polish market, it looked for us, I don't know how it looked from your side, that the government actually is against the stock exchange. We had the mining tax, we will have other taxes for companies. So basically the question is, how do you feel investing in a market when the state ownership is so high, and to what extent do you think that it may actually go or lead to some wrong ways, as we saw perhaps in Poland last year? Also, we can talk about pension funds and what will happen to them after the transfers have been cut. Nadia, what do you think about what has happened to Poland?
I think increasing regulation is a fact of life in every market at the moment. I spend a lot of my life looking at banks, and it's all over the place. So I don't feel that it's been so much worse here than in other markets, actually. I do really commend what the Treasury and their partners, the Warsaw Stock Exchange, have done in terms of bringing new companies to market. And what that has meant, from my perspective, is a lot of the newer companies that have come to market, we're seeing new independent boards being appointed. We started with that last year, but this year we're seeing even more new independent board members coming onto the boards of these companies that have come to market in the last couple of years, which is very commendable. Bringing in different experiences, international or domestic experiences, I think is a big positive. What I have struggled with in the past was a lot of government intervention into the management of some of the companies that came to market, let's say 5 years ago, where management teams were changed regularly, delivery on promises made at IPOs was not fantastic, and the companies that have come more recently it's been a much more positive experience. So in terms of how I look at how the government has kind of got involved in the market, for me it's improved.
Okay. Well, just the same question from Grzegorz, because Templeton, which is an example of activist investor, I'm sure that you cannot give thumbs up to Polish government and the Treasury and these issues with the mining tax and pension funds transfers. Tell us something.
I think we should differentiate between two different issues. One is the government as a policymaker, two, government as owner of these companies or shares. And I think in Poland it was to some extent these two functions, they were separated, not fully though, it's very hard to do it, but I think work has to be done more to really fully separate those people that act as owners of the shares in those companies and those people who set sector or government policies. And of course, no one likes higher taxes, but there are two things in my life that has to happen: death and taxes. So we have to be used to it, and other governments that did apply similar policies. But then, you know, of course, there is some work to be done on government as the owner of the shares to become even more like reliable and predictable investor. I guess, you know, the higher transparency of you know, strategy of the government in case of their holdings in the companies would be welcomed, and ideally the government should go down to zero in many of those companies.
Down to zero.
May I? The rule of thumb is very, very simple. The government is not a good manager. They have other things to do. So small involvement in a companies usually is better. But I think Poland now doesn't stand out as something negatively through the point of the ownership in the companies, because Poland still is in a process of transformation. So there will be more privatizations, there will be more sellout of the stakes. And I think it's important what was said earlier, that what role as the stake ownership government will take. And I can give you two examples from France, where the government owns Renault, still 15%, and Renault is one of the, Renault-Nissan now is one of the best companies in the world, and they don't bother them all, they don't see them all, there's no influence, zero. And Aquitaine, where was the big scandals, they mismanaged 200 million euros, and there was an example of really bad government ownership. As long as government doesn't nominate CEOs, there's a changes in the management, doesn't influence that, this is fine. I mean, there's a very good company in Poland which is government has a stake, it's a PZU, and I think it's very well governed, managed, and so there's an positive example in the Polish market. So, but in essence, there's always political sort of temptation to put own people in the States, and this is the worst thing that can happen.
There is this stereotype about iRegion that I always wanted to test. People often say that if you want to make money in Russia, you have to pretty much make the right bet on where the crude is heading. On the other hand, when you think about Poland, Turkey, this is mainly about banks or often about the local macro. Would you agree with such statement? Is there any truth to this stereotype? Nadia?
Well, Russia's trading at 5 times prospective earnings, and emerging markets are trading at 10, and the crude price isn't that low, so I think they've got some other issues. I think they've got a huge opportunity to surprise on the upside because expectations are incredibly low. I mean, you can look at individual stocks in Russia and correlate them to the oil price. When the oil price is high, there's very little incentive for reform to go ahead. So the counter-argument is, well, maybe some pressure wouldn't be a bad thing. Because, as I say, valuations are low, expectations are low. There's a lot of room for upside surprise in that market if some of the right things start to be done.
But in general, it's not that simple. It's not just about one thing.
It's about companies. It's about companies that I think when, you know, if the macro's a disaster, it's going to be hard to find good investments anywhere. If the macro's great, all boats will float to some extent. But we're not often in those extremes all the time, and when we're not, it's about finding the companies that are delivering ahead of expectations. We focus on a long-term view, and that gives us the chance to try and look at companies that are going to deliver more than expected, and that's where there's upside.
I think this is basically what we heard. Sometimes we hear from investors that actually they prefer to invest in emerging markets which do not have natural resources, because this means, like Poland or Turkey, for example, this means that those societies need to run faster, basically, to develop and to grow economically, rather than those markets and societies and states which have resources and don't need those reforms. Do you think that you can, when you look at Russia, Turkey, and Poland, that there's something in common between Poland and Turkey because we are crude oil importer? And do you think that this is then, in this respect, right for us to look for shale gas, for example, or should we still, be looking for something innovative rather than resource?